I'm on a daily chart here, and we're talking about the rotation zone for entries and stops. So in order to put the rotation zone on here, or in order to use it, I have to put it on here. So the first thing I'm going to do is I'm going to go to indicators, go to moving average, and I'm going to go to moving average exponential. I'm going to add this one, and then I want to sorry, guys, I meant to do this ahead of time, but if anybody remembers how to, there we go. All right, so I want to change this one. I'm going to change, so we use the 8 and the 21 exponential. So I'm going to go ahead and change this to a 21, and then I'm going to add a second one in here. And just forgive me if there's a better way to do it. This to me is the easiest way. And I'm going to go ahead and make this a different color. Let's make it a red. I like my reds. And then I want to make this the 8. So the 8 and the 21 is the rotation zone. See if there's a way to thicken this line. I'd like to do it without taking too much of your time. Yeah, the line weight. I'm going to go with 3 on the red one. All right, this way it shows up in the middle of these candle bodies a little bit better, which are obviously also red. So, sorry about that. So I now have a full rotation zone up here, okay? And that's really what I'm trying to get. Zoom this a little bit. All right, so I've got a rotation zone up here. In addition, I always want to put the 50-day exponential on here when I'm looking for entries. And we'll look at a couple of other names, but that's also going to be an exponential. Why? Because it tested out better. That is simply the reason. A 50-day exponential tests out better than a 50-day simple does when you go back and look at the data. And we looked at quite a bit of it. Okay, let's do this on a 2 or a 3. Let's go a 3. All right, so now we've got the basics of the rotation zone on here. Something went wrong. That's still an 8. Oh, I changed the wrong one. Okay, that's okay. Change this back to a 21 and leave it blue. All right, so now I've got the basics of the rotation zone on here. The red is the 8 exponential moving average. The blue is the 21-day exponential. Now I'm going to call it a 21 period and an 8 period because if you're looking at a 60-minute chart, it should be a 60 period. Okay, 8 period, 8 60-minute period moving average, and a 21 60-minute period moving average, and so on. Okay, so this is a daily chart. So therefore, I have the 8-day exponential moving average, the 21-day exponential moving average, and the 50-day exponential moving average. Now, as a point of fact, I'm generally going to have the 200 on here as well, but the 200 is going to be a simple. Okay, so in trying to figure out entries, what I've got right now on Netflix is I've got a first cross. That means I'm starting to look for shorts. It does not mean that I'm short. Okay, so if I had an ideal scenario on Netflix earnings, Netflix would disappoint. Okay, because if they did that, you'd have a big down sloping candle below the 50. And then once we're below the 50, I know I have a new medium-term downtrend developing. So what I'd be looking for is a move up into the rotation zone that then reversed and turned back lower again. And that's where I would enter a short position. I'm going to go back in time here and see if I can find an example of this. All right. I found an example already, but it's on the ups. Yeah, let's do the down slope. Okay. So here we have a cross of the 8 and the 21 on Netflix. Okay. It also moved below the 50 at the same time. That move below the 50 is not a prerequisite for finding a trade. It just gives me an idea that I'm in a medium term downtrend. Okay, so here I got a cross down of the 8 and 21. And then I've got the 8 and 21 widening and heading on a sharp down angle. Okay, when I get that, I want to find a move up into the rotation zone that fails. Now, this one does not qualify for me. Why? Because it went up and tested the 21 and came back and closed below the previous day's close. All right, so I got to move up into the rotation zone. The 21 holds, and then we go down and we close below the previous day's close. Now, this here is what I'm looking for, okay? This area right here, because I have an upward sloping, I have an up candle, then I have another up candle, then I have a move to the top of the rotation zone. So this is what I'm looking for to give me a short trade, okay? It's not up here. Some of you guys may say, well, why didn't you take the short trade up here? Well, the same reason I didn't take the short trade here or the long trade here or the short trade here, because when this thing is flat and moving in a congested area, I'm just going to get chopped up. So when I get this first cross, I want confirmation that the downtrend is taking hold. So where's my trade? Well, now that I've got this move up into this rotation zone here, I'm going to draw a best fit trend line that's downward sloping against these two green candles here. Now, the third day, I get a close below, and that's an entry for me. What's it a close below? Well, I've got evidence because I've closed back below the 8, and I've closed below this best fit trend line. So on the close here in October, I can enter a short position. And you could see that we went down from here. Now, targets, whole nother conversation. I'm not going to talk about those right now. But that is my path. Now, this was also the last sect of earnings. If I show you guys my target selection, you'll have an idea that I was probably out by then, before this particular date. But we got the recent swing low at 344.73 here. Now, here we got to cross up, okay? Then we got to move down into rotation zone. I'm not taking this long here. You might ask why. Well, because the rotation zone is still flat. And I have no way of knowing whether I'm going to be in this kind of price action or this kind of price action just on the move up. So I'm looking this entire time for a move down into the rotation zone that doesn't really break it and close below it. Now here I've got to move into the rotation zone so I can draw my best fit line looking for a long trade, okay? But prior to getting a break of that best fit line, the rotation zone flattens out. I get a couple of closes. So now this is gone. It's not a trade for me. So that's the separation of trades, okay? I can go back in time and find some others on this Netflix chart. Here's a good long trade. I get a first cross here. We have what's called 8 pushing the price, which is one of my favorite things to see. The 8 is actually holding up. Now here we get a clear move into the rotation zone, yet there's no close below it, right? So I'm going to go ahead and draw this best fit trend line. And then when I get this close above the trend line, which is all the way up here, okay, that's a long signal for me for Netflix. All right. The first cross, first test is the strongest signal. Okay. The first cross, first test is the strongest signal. All right. Now you might say to me, well, what did we have right here? Okay. Well, we had a test of the rotation zone. All right. So I would draw a best fit trend line on an angle up here. Okay. Just kind of in this area. I don't get a close below it until down here. So is that a short signal? Well, this is where a little bit of the art comes in. I'm going to say on a straight technical basis, yes, it is. But as you get to know the rotation zone, you'll see that it kind of flattened out here. It was no longer on an angle. That's not really the case here. Okay. It started to turn, but didn't flatten out like this one did. If I draw horizontal lines, you see a pretty long flat area here before we get this close. Now, by the time we've gotten this close, the 8 is starting to turn up. You could see it in the body of the green candle there. So that is not an entry for me. This is art versus science. All right. So that's sort of the gist of entries on the rotation zone. The first cross is the best, but you can do multiples. So down here, I had a first cross rotation zone, and I had a really ideal scenario because not only are the 8 exponential and the 21 exponential crossing, but the 50 crossed through them as well. So now what we have is a potential long trigger to the upside in the future, not right here. And we also have a potential 50 to use as a stop area as well. Okay. Now, the first thing you need to know about the 50 as a stop area is it's dynamic. All right. So when you enter a trade, I've shown you guys in the past how to position size for risk management, right? Your initial position size goes to where the 50 is when you set the trade up. Okay. So keep that in mind as I continue to speak here. What I've got here is a first cross up. That means I'm going to be looking for longs. And the fact the price action is above the 50, I'm really going to be looking for longs. It's going to be a medium-term long. Okay, meaning I'm probably not getting out in 5 minutes. Now, can you look for shorts in this scenario? Yes, you can. But you're going to want to do them on shorter time frame charts because right now the price action is above the 50-day on a daily. So if you drop down to a 15-minute chart, for example, right? You say, well, I've got a rotation zone developing. If it goes up in here, can I take a short? Yes, but you don't want to take a short whose target is below the daily 50 because you're going to have a hard time getting it. That's if you're in the price action here. Now we're coming below the 50, so the whole sort of mindset shifts. You're going to be looking for short trades, okay? And you don't want the target of those short trades to be, or rather the stop of those short trades to be short of the 50, right? You want them to be above the 50. So you use it in that way. If you're in a situation now where it looks like we're going to be core short Netflix and you want to put on a long on the 5-minute chart, just make sure your target doesn't need you to break the daily 50. Okay. Does that make sense? Because I kind of flubbed it there for a second. All right. If you want to put on a long trade in Netflix on a short-term chart, but we're in a longer-term shift to a short theme for Netflix, you do not want your long trades target to be above the daily 50 because you're going to have a hard time getting through it. Okay. That's basically in a nutshell what I'm trying to say. So let's look at this price action here. We have a cross of the 8 and the 21. Remember, the 8 is the red one, the 21 is the blue one, and they crossed up. Is that a long signal for me? No, it's not. Okay. Because if we're in sideways, if this is just generating sideways, just like this cross here between the 21 and the 50 is not a short trade because all of a sudden, a few days later, it crossed back up. You don't want to be involved here. Okay. Anyway, so now I'm looking for the rotation zone to widen apart, which it is, and to move up on a steeper and steeper angle, which it is. Now I get the first move into the rotation zone. This is a very good area for me to get long. Now, it does not mean it's going to work. Okay, moves into the rotation zone work multiple times, 4 to 5 times on a long stock, 2 to 3 times on a short stock. You're looking at commodity ETFs, it's about 3 to 4 times with each one. But when you're talking about stocks, stocks have a natural upward bias. So on the long side, cross into the rotation works like 4 to 5 times. Short side, 2 to 3 times. All right. So this area we're looking at here is a long trade. Let me get rid of the recent price action so it'll help us. So now what am I going to do? Price is moving into the rotation zone. I got no close below it. So I'm going to take my trend line and I'm going to draw just a best fit trend line. It doesn't have to be perfect. Okay. It doesn't matter if some wicks are going through it. I prefer to look at the opens and the closes for this purpose. Now I get this close right here. That's my long. Okay. This close right here. Trying to see, these numbers are so small for me and I don't have my glasses on. Looks like it's June 4th. Okay. Close of June 4th. You don't have to wait for the exact close. Obviously, as we get in near the close, it's not likely to get back below this trend line, right? So that's going to be my trade. Now, where do I put a stop? Well, like I said, my dynamic trade, or my dynamic stop rather, is the rotation zone's bottom end and the 50. Okay, so here's the 50. Where is the 50 on this particular day? Looks like it's about, I got to put my glasses on for this so I can't see it.
I cannot see as well. That's
all right. It looks like it is 6/12/15. Okay, that looks about right. 6/12/15. So your stop's going to be below the 50 here. Now you'll notice as I have my crosshairs, look to the left. What else is pretty close to where the 50 is? These lows right here, right? So now I've got a good reason to think that this is a good level overall, right? I've got this sort of congestion area. I'm pretty close to these lows, and I'm pretty close to this rotational high. It's not exact. But so if I'm looking at this as being 6/12/50 as being where my stop's going to be, I may go 6/10, 6/09, okay? But I'm going to take this long trade. Now you can see we rallied up here. Now you already know that I don't take trades. My trades have to be at least 1-to-1 reward to risk or better. All right. So if I'm entering on the close here, which is approximately 650.27, and let's say that my stop is, let's just say it's 610.27 to make the math easy. I know I'm looking at $40 target. And when you got up to here, I clearly reached my $40 target. Now that is not how I choose targets, but I'm just giving you guys a heads up that that's probably going to fit. When I calculate my target out, it's probably going to fit so that my target is somewhere around 681, 682. So I have at least 1-to-1. So my profit would have been taken here. Nowhere in this realm did I close below the 21, and nowhere did I get below the 50. Now, each day that the 50 moves, I want to move my stop up. If you don't want to do it every day, that's fine because your initial risk still applies. And since you calculate your position size based off the initial stop, you're never going to have excess risk on. But if you're one of those people that wants to just continue to reduce risk, you could move it up along the 50. Or if you really want to clock it nicely, you could move it up below the 21. But I would call that a dynamic stop because I would wait for a close below the 21. Now, if you notice here, the first close below the 21 we got also breached the 50. So you might have gotten stopped out on one of these 2 days anyway, waiting for this close below the 21, but you would have gotten stopped out at a very small loss versus this close right here if you didn't reach your target in this area. And a small loss is okay because when you're generally looking at your research, your back testing of your plan, your initial figure should be calculated off your initial stop. And if you're using a trailing stop, a smaller loss than you originally calculated out for is a huge win. It's a huge win because that means next time you're going to have a fairly good position size for your trade because you're only going to be taking a little bit of money out of that position, a little bit of loss out of your total capital. So now what am I doing here to Leo's question? It seems like you might be looking at a lot of charts. You're right, Leo. But what I see is happening right now is I've got a rotation zone forming below the 50. So what does that mean? That means I need to look at Netflix tomorrow morning and the next day and the next day. Let me put up a random chart here. Ford. Let's put up Ford. All right, I'm disconnected, it looks like. Okay, here we go, Ford. See this chart? I don't need to look at this. It's probably on my watch list, okay? But I don't need to look at it. Just go, Ford, Bah, I got nothing. Let's see, GM. Yeah, nothing here either. Let's go. I don't know, guys. Pick a stock. It doesn't really matter. Let's go Facebook, Meta. They changed their symbol, right? Okay, so Meta, I've got a downward cross, and it's below the 50. So I'm looking here. So now tomorrow morning, I'm going to prioritize Netflix and Meta. Let's go to Caterpillar. Nothing here. Well, that's not really true. Caterpillar is going to be in my second batch of analysis because it could possibly go down in here and rotate back up. I have a first cross way down here, and I have the price action getting above the 50. So I've got the potential for a long trade on Caterpillar. Okay, let's look at GLD, which is gold. Yeah, nothing in gold. Okay. So, and so forth. So, yes, I have to look at a lot of charts, Leo, but I don't have to deeply analyze every single one of them because at a glance, I could tell if I'm looking for a setup. For example, this is GLD, right? Right here, I would have had a trade right in this area here. Okay, because I got a first cross and I'm looking, I'm like, yeah, I don't really have to look at it. Whoa, got some downward movement. Got some downward movement on March 4th. So I'm going to look at it on the 5th. Actually, it was March 12th. So I'm going to look at it on the 13th. I'm going to look at it on the 14th, 15th, 16th. Now we're starting to get in there. Okay, the weekend has come. This is the 19th now. I can draw this best fit. Now, it didn't quite get in there, right? But I've got enough of a downtrend here to draw a best fit trend line right here and then go, okay, that's good. I can do that. Long trade, stop below the 50, rally. So, yes, I have to look at a lot of charts, but a lot of the charts are like this. They're just quick because there's nothing happening. Now, this does a couple of things. Okay, guys? It allows you to cover more ground. A lot of traders say things like, well, you know, I only trade Apple, or I only trade Microsoft, or I only trade NVIDIA. Good luck, man, because those things can be in all kinds of crazy moves and then just go quiet. And then you got nothing. With this kind of a practice where you have a defined entry or a way to find a defined entry, you could look at 25, 30 charts, and maybe you got 4 charts that have a probable entry, and 3 of them are tomorrow, and 2 might happen on Monday of next week.
I was actually going to ask you, Bob, you prefer only large caps or small caps when you're trading, or if the rotation zones are being violated by stock, then
I prefer large caps. And the reason I prefer large caps, and I'm talking about tech, everything, and the reason I prefer those is because there's more volume, more data, moves are more reliable. Now, if you want to look at small caps, I talked about how to find that. Go to some really high performing small caps funds. All right, this is the best way to find small caps. Promise you, you won't have a better way. Go to some really high performing small cap funds. Find the link to their holdings and go down to their lowest holdings and start analyzing those. Don't go into what they have a 20% of their fund in, or 15% of their fund in, or 30% of their fund in. Go look for things where they have 1%, 2%, 3%, because they're just starting to look at those. And then you can find some movers if that's what you want to do. My preference is large cap because the price action and the fundamentals are battle tested, for lack of a better phrase. Does that make sense?
Yeah, definitely. Thank you for that, Bob.
Now, Ben just said, do you look at any other time frames when looking for setups? I do. I look at a 4-hour and I look at an hourly. But usually that's just to fine tune an entry for me. Okay. The bulk of my analysis is done on a daily, Ben. I recommend you use intervals of 3 to 4, or if not possible, 2 to 3. So in other words, if you're looking at a 15-minute chart, you should be looking at a 30 and a 60. That's what I mean by that. If you're looking at a 5-minute chart, you should be looking at a 15 and then a 30. Multiples of 3 is your best. Why does that work? Because that's what tested out really well. I don't have any other reason for that. I don't know why. Must be a Fibonacci type of a human nature thing. So for me, the closest thing, I'm not going to look at a 3-hour chart. So I go, because they're just not very widely viewed. So I'm going to look at a daily, an hourly, and a 60-minute.
Gotcha. Thank you. Thank you so much, Bob.
I'm sorry, a daily, a 4-hour, and a 60-minute. My bad.